ARM and Qualcomm both reported their quarterly figures after the market closed. ARM is down, Qualcomm is up. Both had great quarters, but one company is extremely expensive, the other a bit less. The other had issued good guidance, the other a bit less. So let's start off with ARM. ARM right now is down 7.4% after hours, has a market cap of close to $145 billion. Year to date, stock was up 91%. At one point, it was up 140%. Valuation wise, extremely stretched, right? I've talked about ARM for quite a while. I still admit, a great company, growing fast, but let's be honest, there's always a correct price to pay for these things. When you see your forward PE 91.6 times, EV to EBITDA 73.9 times, price to sales 37.5 times, even price to free cash flow 150.3 times. I mean, it is extremely expensive, even if it is ARM, even if it is a great company. And so I'm not surprised seeing it down another, well, now close to 8%, despite a good quarter. Sometimes being good is just not enough. That's not their fault, that's the stock market's fault. And so we'll start the video with ARM's numbers and then go into Qualcomm as well. The next video will probably be about Meta. So if you're interested in all of that, sit back, relax, hit all the buttons, like, subscribe, notification bell on, so you never miss a video, especially not in this earnings season. Plus, we're very close to reaching 50,000 subscribers. So whoever hits that subscribe button and suddenly see 50K, you get a cookie from me. If you want to support me even further, do check out the link down in the description and the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And so ARM, for those of you that don't know what they've been doing in the last couple of years, previously, what you got is basically this. General purpose CPU, majority is mobile, and then the other. Now, actually in the last year or two, you've got way more. You've got mobile, which is still a big deal for them, but then you've got auto, cloud and networking, IoT, consumer electronics, the ARM platform, etc., etc. Their market has grown and expanded each and every year. And so right now, these are the big results. They also said that chip based on ARM v9 technology now contributes around 25% of ARM's royalty revenue, which is up from around 20% last quarter. Increased ARM v9 adoption in the mobile market drove smartphone royalty revenue up 50% year over year in Q1. We expect the migration of AI from the cloud to edge devices to drive even higher compute demand per device over time, and ARM's unprecedented share across all end markets means that ARM is uniquely positioned to benefit from this migration, which will increase royalty revenue per chip. I agree 100%. So, revenue came in at $939 million, above their own guidance. Non-GAAP fully diluted earnings per share came in at 40 cents, also above their own guidance. As for the annual guidance, fiscal year 2025, they did not change it. Now for Q2, they expect revenue to come between $780 to $830 million, and non-GAAP fully diluted earnings per share between 23 to 27 cents. Now the great people at Consensus Gurus basically shows us where they beat and where they miss. Revenue beat, license and other beat, royalty did miss by 3.9%, gross profit beat by 4.7%, gross margin beat by 74 basis points, operating profit, margin, EPS all beat, free cash flow, big miss here, actually no free cash flow. And then the big issue, of course, is a guidance. Miss across the board for Q2 and for the full year 2025. Market was expecting a little raise that never came. And so if you look at the other numbers here from a GAAP basis, operating income $182 million, net income $223 million. Yes, it does increase quite a lot year over year. But remember, this is a company with $145 billion in market cap. This is very, very expensive. RPO still did increase 29% year over year, but as you will see, quarter over quarter, it actually dropped. So when we look at ACV, or annualized contract value, at quarter end, that was $1.19 billion, up 14% year over year and up 1% sequentially, driven by major deals signed in the current and prior quarters. As you can see right here, I mean, despite all the trends that we've been seeing, I'm sorry I'm not seeing this in these numbers, right? You would have thought that this would have jumped quite significantly. Same with RPO. At quarter end, that was $2.16 billion, up 29% year over year, but down 13% from $2.48 billion. This year due to the contribution to revenue from backlog during the quarter. We expect to recognize approximately 22% of RPO as revenue over the next 12 months, 14% of the subsequent 13 to 24 month period, and the remainder thereafter. It's what I've been saying, I think in the last 2 videos or so. Okay, you expect to recognize that, but if what you're telling us is true, shouldn't RPO increase each and every quarter by quite a significant amount? We've seen that jump from Q1 to Q2 of fiscal year 2024, right? Nice jump quarter over quarter. But since then, barely anything, right? Small increases quarter after quarter, and now a 13% drop. This was my issue when looking at ARM. Expensive, great company, but I'm not seeing what they're telling us in those numbers. And so right now, if we look at the stocks, sits at $132 or so, which goes back to the lowest point it was this week already. The 200-day moving average sits at $106. Can it reach that point? I don't know, remains to be seen, but it has been in a downtrend for the last couple of weeks. It peaked at around, $190 or so. Very, very expensive, was also overbought back then. RSI is coming down. Look, it might get quite interesting if we drop lower, right? If we can get closer to that 200-day moving average, I might get interested, even though even at those prices, it will be expensive, less expensive than right now, but still expensive. But again, like I said, this is a very, very good company, great track record. So if you can get it at good prices, definitely do so. And if not, then skip it. Plenty of other companies you can buy out there. Moving on to Qualcomm, and Qualcomm is a different story. It's a company also with a market cap of 201.9, now a bit higher because it's up 5% after hours, $202 billion in market cap. Forward PE, 17.3 times compared to its 5-year mean of 16.1 times. Also pays a small dividend, has a dividend yield of 1.88%. EV to EBITDA, 13.3 times. Price to sales, 5 times. Price to free cash flow, only 16.5 times. Price earnings to growth, 1.5. So this is the difference between Qualcomm and ARM to me. Great company, also gets that tailwind from the AI trend, PC refresh, AI PCs, all of that. But it is not as expensive, despite it being up 26.26% year to date, 40% year over year. Yes, there was a small correction in the last couple of weeks, around 25% or so, which, to be honest, I did not notice it because it could have been a good buying option. But then again, could have been a gamble because it is earnings season. Small miss would have punished this company. But definitely, this company has a lot of momentum going for it, which is why we're seeing these numbers. Revenue came in at $9.4 billion, GAAP EPS $1.88, non-GAAP EPS $2.33. For QCT, revenue came in at $8.1 billion at the high end of the guidance, $2.2 billion combined automotive and IoT revenues. Automotive revenues actually increased 87% year over year. As for QTL, revenues there was $1.3 billion within guidance range, and EBIT margin of 70% within guidance range as well. They returned $2.3 billion to stockholders, including $1.3 billion of share repurchases and $900 million in dividends. And of course, Qualcomm are now making a big move towards the PC market, especially with Microsoft. So they launched their X series, X Elite, and X Plus. I've seen some very positive reviews with regards to the performances, with regards to the price as well. If you have ordered one, bought one, let me know down in the comments below what your experience is or going to be when you get it. So you've got the X Elite, these are the benchmarks performance-wise, and you've got the X Plus. To be honest, I'm quite tempted to try it out, but since I bought a nice gaming laptop last year, which cost quite a pretty penny, I don't think I will be in a rush. And so for this quarter, here again, we look at Consensus Guru. We can see a beat across the board for the quarter and for guidance. The only two misses here were from handset for QCT, which small miss 0.1%, and QTL 2.8%. That's a bit bigger, but nothing really that would alarm you. And so with regards to the QCT highlights, they say 4th consecutive quarter of record auto revenues, Does that surprise any of us? Not really. Automotive came in at $811 million. They say here, we secured more than 10 new design wins with global automakers during the quarter, including next generation digital cockpit, connectivity, and/or ADAS and autonomy. Since every vehicle is becoming smarter, we're basically getting computer on wheels. I'm not surprised to see automotive for Qualcomm growing and winning. Although, when we looked at Nvidia for the past couple of quarters, auto did not perform as well as Qualcomm. Maybe that might change. As for handset, that came in at $5.9 billion, and Internet of Things came in at $1.4 billion, which is down year over year. Now, since the next video is going to be about Meta, they say here we remain excited about the continued positive momentum in XR, mixed reality, particularly the success of Meta's Ray-Ban smart glasses. I've been saying this for a couple of videos now. I've got them. It's amazing. Completely replaced earbuds or AirPods, whatever you call the Apple stuff. It's amazing. Sunglasses, or can be optic glasses as well. You've got music, you take phones, pictures, videos, you can talk to it as well. It's really worth a try. They say our sales are exceeding our expectations due to in part the integration of Llama, and we foresee an acceleration in demand for extended and mixed reality devices as new use cases enabled by generative AI gain scale. 100% agree on that. And so, as for guidance, they expect Q4 revenue to come between $9.5 to $10.3 billion, non-GAAP diluted earnings per share $2.45 to $2.65. As we've seen, all of those numbers were a beat. As per the segments, so QCT revenues between $8.1 and $8.7 billion, with EBIT margin between 27 and 29%. QTL revenues $1.35 to $1.55 billion, and EBIT margin there between 70 to 74%. And here, looking at the graph, like I said, stock is down, was down 27% since the highs here mid-June. And yeah, this week could have been a good buying opportunity at the 200-day moving average. To be honest, I have not noticed this. Maybe one of the viewers did and picked up some shares. Congrats to you. You got more shares at better prices of this great company. RSI was pretty neutral as well. So yeah, good momentum for Qualcomm, for the stock now, and for the company definitely. So that's the contrast. That's basically what you're getting. Good quarters for both, but one was just super expensive and so did not live up to the expectations. The other, same thing, good quarter, good guidance as well, was not as expensive, continues to execute, and so the stock gets rewarded, and so do the investors. So that's about it for this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one.